Boom. July 4th, 2025. A day of celebration, not just for the nation, but for Wall Street as well. The atmosphere is electric, a unique blend of patriotic fervor and financial triumph. Wall Street is celebrating more than fireworks this year. The mood is jubilant, a stark contrast to the uncertainty that has plagued the markets in recent times. The S&P 500 and Nasdaq have both hit record highs, shattering expectations and defying predictions of a looming downturn. These milestones represent more than just numbers. They symbolize resilience and innovation, signaling remarkable investor confidence, a renewed belief in the strength and potential of the American economy. This confidence is palpable, driving further investment and fueling the market's upward trajectory. This isn't just another day. It's not merely a blip on the radar. It's a turning point shaped by technological innovation, a testament to the power of human ingenuity and the relentless pursuit of progress. Economic resilience and smart monetary policy, a delicate balance of factors that have converged to create this extraordinary moment. The rally is driven by the dominance of artificial intelligence, a transformative force that is reshaping industries and redefining the future of work. With companies like Nvidia leading the charge, spearheading the AI revolution and reaping the rewards of their groundbreaking innovations. Unlike past rallies, this surge is concentrated in tech, a sector that has emerged as the undisputed leader of the modern economy, redefining market leadership. The old guard is making way for a new era of tech giants. We'll break down the key drivers, the underlying forces that have propelled the market to these unprecedented heights. A strong jobs market, demonstrating the resilience of the American workforce. The Federal Reserve's careful moves, navigating the complexities of monetary policy with precision and foresight. And the unstoppable AI revolution, a technological tsunami that is transforming every aspect of our lives. Whether you're a seasoned investor or just starting out, eager to understand the dynamics of the market, this moment will shape strategies for years to come, influencing investment decisions and portfolio allocations across the globe. We'll connect the dots between economic data and stock prices, revealing the intricate relationships that govern market behavior, and show how one company's success can move the entire market, highlighting the interconnectedness of the global financial system. Welcome to a deep dive into one of the most exciting chapters in recent market history, a period of unprecedented growth and innovation that will be studied for generations to come. Let's clarify the basics of the stock market and dive into understanding some key players. We often hear about the S&P 500 and the Nasdaq, but what exactly do these terms mean and why are they so important? The S&P 500 tracks 500 of the largest U.S. companies, representing a broad spectrum of the American economy. It's a benchmark that many investors use to gauge the overall health of the stock market. Across all industries, from manufacturing and healthcare to finance and technology. This wide representation makes it a comprehensive indicator, making it the best gauge of the American economy. Its performance often mirrors the overall economic sentiment and provides insights into the financial well-being of the nation. The Nasdaq Composite, meanwhile, is tech-heavy, with a strong emphasis on technology and growth-oriented companies, spotlighting innovation and future growth. It's a hub for companies pushing the boundaries of technology and driving advancements in various sectors. When these indices soar, indicating a bull market, it signals optimism about both current stability and future breakthroughs, reflecting confidence in the economy and the potential for further expansion. Investors use them as benchmarks to measure their own performance, comparing their portfolio's returns against these indices to assess their investment strategies. While economists see them as real-time polls of business health, providing valuable data for analyzing economic trends and making informed forecasts. The S&P 500's all-time high shows broad economic strength. It signifies that a wide range of companies are performing well, contributing to overall market prosperity. The Nasdaq's record underscores tech's power, highlighting the dominance and influence of technology companies in today's economy. Both hitting milestones together, achieving record highs in tandem, signals a market that's strong at its core and excited for what's next, indicating a positive outlook for future growth and investment opportunities. These indices are the pulse of the corporate world, reflecting the collective performance and sentiment of businesses across various sectors. With ripple effects across the globe, influencing international markets and impacting economies worldwide. In today's market, Understanding their differences is more important than ever, as it allows investors to make informed decisions and navigate the complexities of the financial landscape. Their simultaneous rise tells a story of stability and innovation, showcasing the resilience of traditional industries alongside the rapid growth of technology. It's a dual narrative, present-day strength and future-focused excitement, reflecting the dynamic interplay between established sectors and emerging technologies. That's why we watch them so closely, as they provide valuable insights into the current state and future direction of the economy and the stock market. Despite inflation and global tensions, the market's faith in AI's transformative power has kept it moving upward. Earnings from key tech players keep beating expectations, reinforcing the rally. This is a narrow market. Few stocks, like Nvidia, have an outsized impact, reshaping the indices and fueling a self-reinforcing cycle. The dominance of these leaders is the defining feature of 2025's market.
Investors are buying into a narrative of technological disruption, betting on AI as a fundamental driver of future profits.
This rally has been a steady climb, fueled by resilient economic data and a tidal wave of enthusiasm for AI. Unlike past rallies, this one is concentrated. Mega-cap tech stocks are pulling the indices higher. The S&P 500 has crossed 6,000, and the Nasdaq has topped 18,000, representing trillions in new wealth. High-wage sectors, such as technology and healthcare, are experiencing significant job growth. These industries are not only expanding but also evolving, demanding specialized skills and expertise. This growth signals a definitive shift towards a more productive, knowledge-based economy, where innovation and intellectual capital are key drivers. The rise of these sectors indicates a move away from traditional industries and towards a future powered by information and technology. As these sectors expand and thrive, so do the companies that are at the forefront, driving the market rally and setting new benchmarks for success. Their performance directly influences market sentiment and overall economic health. It's a virtuous cycle. Strong, successful companies hire more employees, which in turn strengthens the overall economy and boosts stock prices, creating a positive feedback loop. This cycle reinforces growth and stability in the market. Wage growth is moderating, which helps keep inflation in check, creating a Goldilocks scenario for investors, where conditions are neither too hot nor too cold, but just right. This balance is crucial for sustained market performance. The current economic environment is just right, providing the perfect backdrop and stable foundation for stocks to continue their upward climb. This stability has been absolutely crucial in facilitating the market's historic run and unprecedented gains. It's the bedrock upon which investor confidence is built. The jobs market isn't just a dry statistic or a collection of numbers. It's the powerful fuel and driving force behind Wall Street's impressive fireworks and celebratory atmosphere. That's precisely why investors and analysts alike are watching every single jobs report so closely, scrutinizing the data for insights into the economy's future.
The labor market's remarkable resilience has served as the bedrock of the economy's soft landing, preventing a more severe downturn, and significantly boosting investor confidence in the long-term prospects of the market.
A soaring and thriving stock market fundamentally needs a strong and healthy underlying economy, and the U.S. labor market has consistently delivered on that front, providing the necessary support. Jobs data throughout 2025 has consistently beaten even the most optimistic expectations, showcasing the strength of the American workforce. This strong performance has kept unemployment rates remarkably low and has provided crucial support for robust consumer spending across the nation. This positive trend has significantly eased recession fears and has given the Federal Reserve the necessary room and flexibility to effectively fight inflation without derailing overall economic growth.
The Fed's steady hand has guided the economy toward a soft landing, creating ideal conditions for this rally. Investors are front-running the Fed, confident that moderating inflation and a strong economy will allow for easier policy. The result, a historic market rally built on optimism and careful central bank management.
The market surge is largely a bet that rate cuts are coming soon, making stocks more valuable today.
Lower rates make borrowing cheaper and stocks more attractive, boosting valuations. The Fed's patient, data-driven approach has given investors a clear roadmap.
Over the past year, inflation has cooled, bringing relief to markets and shifting the conversation to when the Fed will cut rates.
The Federal Reserve is the driver of this economy, using interest rates to steer growth and control inflation.
The 2025 rally is, in many ways, Nvidia's story. Its surge has propelled the market into uncharted territory. The company's rise is a symbol of this new era.
Nvidia's success validates the AI investment thesis, lifts other tech stocks, and has an outsized impact on the indices.
Explosive demand has led to record-breaking profits, making Nvidia the biggest contributor to the S&P 500's gains. Its earnings now move the entire market.
Nvidia isn't just a chip maker, it's the foundation of the AI ecosystem.
Its GPUs, once for gaming, now power the AI revolution across industries.
Nvidia's dominance in AI hardware has made it the backbone of the digital gold rush.
You can't tell this market story without Nvidia. The semiconductor giant's meteoric rise has reshaped the stock market hierarchy, briefly making it the world's most valuable company. This AI-driven optimism is fueling the rally, convincing investors to look past short-term risks. The belief AI will drive a new wave of economic expansion, just as the internet once did.
Investors are searching for both AI enablers and adopters who can show real returns.
Companies are using AI to boost productivity, discover new drugs, and automate tasks, driving higher profits.
Building the world's AI backbone will require trillions in investment over the next decade.
The impact is twofold: massive investment in AI infrastructure and sweeping adoption across industries.
The launch of advanced AI models has sparked a corporate arms race to integrate AI everywhere.
Artificial intelligence is no longer just hype. It's the engine of business investment and market growth. Use this moment to review and reaffirm your financial plan. Your personal financial story matters most.
The real lesson is the power of staying invested, diversified, and focused on quality.
Consider rebalancing to manage risk and lock in gains, not to call a top, but to stay aligned with your goals.
Experienced investors should check if tech gains have made their portfolios too concentrated.
Start investing now, even at a peak. Dollar cost averaging is a proven strategy.
New investors may feel they've missed out, but history shows markets keep setting new highs.
Timing the market rarely works. Consistency and discipline win over time.
Don't get swept up in euphoria or FOMO. A record high is a milestone, not a reason to change your long-term plan.
With markets at all-time highs, what should you do as an investor? On this 4th of July, the S&P 500 and Nasdaq's record highs reflect economic resilience and the power of innovation. The strong labor market and the Fed's steady hand set the stage for this ascent. The AI revolution, led by Nvidia, is the star of this rally, validating a new economic era. Massive investments in AI and productivity gains are fueling long-term optimism. For investors, focus on major trends, not daily noise. Diversify your information sources and learn to read key data. The outlook is cautiously optimistic. AI's story is just beginning. Volatility will come, but the innovation narrative remains strong. Stay informed, disciplined, and long-term focused to navigate what's next. The next chapter of growth is just getting started.